Hello and welcome everyone. My name is Vadim and today we're going to talk about SoFi Technologies. To be honest, we haven't looked at SoFi Technologies for the last couple of years, although it's been on everyone's mind apparently. So today we're going to talk about this company. We're going to talk about the leadership of this company. There are a bunch of good stories there, and we're going to take a look at the bullish and bearish side of investing in it. So if you like this video, please press the like button and subscribe to our channel. SoFi is the financial services company which was founded in 2011. They have started as the student loan refinancing organization back in 2011, but since then have moved into pretty much every kind of loan you can imagine. Mortgage, personal loans, auto loans. Basically, if you need money for anything, SoFi will give you this money and then turn back and immediately try to refinance that debt. So basically, it's like if the payday loan company and the debt refinancer had a baby, and this baby was branded as this new age techie company. Even their headquarters is located in the very trendy part of San Francisco, and it has a cereal bar cafe near the offices. But since these days, SoFi has evolved into much more than that. They are actually online bank with checking accounts, savings accounts, credit cards, investment products, insurance offering, the whole 9 yards of financial offerings. It's kind of an ambitious approach, and the SoFi is trying to be the financial one-stop shop for all of your basically loaning and financial needs, which does make you wonder, is putting all of your hard-earned money into one SoFi branded basket actually a good idea? We will get to that, but first let's meet the leadership of the company. At the helm of the company is SoFi CEO Anthony Noto. Now, this guy has quite a resume. He has graduated from United States Military Academy, previously was CEO of Twitter, Managing Director at Goldman Sachs, and CFO of NFL. Noto has joined the company in 2018 and really tried to do something about all of these bros before pros culture that was in the company then. Because apparently handing out student loans refinancing at the event, which is called the Uproar, is not a great way to appeal to women. But the real cookie is Noto number 2, Vice Chairman of SoFi, guy whose name is Steven Freiberg. Now, Steven Freiberg most recently was a CEO of company whose name is, wait for it, E-Trade. E-Trade, for those who don't familiar with it, is online broker, but they are most famous, or should I say infamous, for their weird ass commercials with little babies crawling in the woods and talking to some investors. If you haven't seen them, look it up. With leadership like that, it's no wonder that SoFi has pulled some really weird PR stunts, like for example becoming NBA's official banking partner, as if NBA players needed courtside access to loan refinancing. Or how about SoFi's recent news that they're allowing their users to migrate their accounts to blockchain.com, a savvy tech move, or just another way to buy Dogecoin with your mortgage money? You'll be the judge. Speaking of the recent news, SoFi has issued their Q1 results, and now we're going to take a look at the results, and while looking at it, try to understand why SoFi stock is dropping lately and when it's gonna go back up. Let's open the Q1 presentation and take a look. We see the members growth is slowing down, but 44% is really good enough. If you take a look at the SoFi's footnotes of this presentation, when they say products, they mean basically every service that they provide to their new members. Again, it's growing, it's slowing down, 30% is again good enough. But what I want to focus on is the revenue results. And the revenue has dropped relative to the last quarter. They still say that revenue is 26% up year over year. But seriously, SoFi is not a seasonal business. So I don't know how much should we compare it to what happened a year ago in Q1. I would compare it to the latest quarter. So revenue dropped a little bit. Regarding EBITDA, I'm not even going to talk about it because first of all, EBITDA is a stupid number. And second of all, it's idiotic to take a look at EBITDA when you're looking at a financial company. EBITDA might work for technological company with not a lot of interest and not a lot of debt, but for financial company, there's no way we're going to actually get some useful information out of this number. Now, a few things regarding SoFi's guidance. The management of the company every quarter tries to give pretty low ball guidance, and every quarter they come back and they say, hey, we beat our own expectations. Now, analysts already know this, and analyst expectations are above what SoFi management says. So if I were you, I would not take these numbers too seriously. One of the more interesting things you can find in this quarterly results is this segment financial, which can explain where SoFi's money is actually coming from. And if we take a look, we can see that there are lending segments, technological segments, and financial services. And we can actually compare revenues of all three segments to see where SoFi's money are coming from. And that way we can answer the question, is SoFi a tech company or a financial one? So if you take a look at Q4, you can see that the financial revenue is 200 million something bucks, but the technological is only about 30 million. So 15 times revenue coming from financial sector, which can explain that SoFi is actually a financial company. Now, those of you who are in this SoFi is the new tech bandwagon might argue that SoFi has an amazing platform. It's really easy to bring new customers. It's really easy to provide good services, but still the root of the company and where they're getting money from is from financial sector. And these are risks which will be associated with this company. Speaking of risks which are related to SoFi. Now, if we're looking again at the lending segment, there are three, let's say, sub-segments, which are student loans, personal loans, and home loans. If we look at the breakdown of all three, we can see that personal loans are vast majority of everything, in about 3.2 billion, and student loans and home loans is about 1.1, something like that. The problem is that personal loans are regarded as the riskiest of them all, and they're actually the vast majority of their revenue, and home loans are less risky, but SoFi don't have any revenues coming from home loans. So my question for you is this. Right now, when interest rates are so high, more and more people will be defaulting on their debt. What do you think will be the first debt people will be defaulting on? That's not the student loans, it's not home loans. It's actually a personal loans. And this is the main risk which SoFi has right now, which can actually explain why in the last year, in the year of this very high interest rate, SoFi stock is not going anywhere. I'm actually thinking that as soon as interest rates are gonna go down, SoFi stock is gonna go up. Not because they're such an amazing technological company, but simply because they will be less risky one. So these were key factors about SoFi Technology. You need to decide for yourself if you view the company as this some new cool fintech startup or just a money lending company which has a nice app. This is of course your money and your decision what to do. Anyway, if you like this video, press a like button, subscribe to our channel, and we'll know that this topic interests you and we'll make more videos like that. See you next time.